TGIF, everybody. NFP Day. How's everyone doing today? Who's tired? Well, suck it up. See what we get out of this NFP. Good morning, Ingmar. How are you? All right, so I just want to rewind the clock back to Monday. I don't think anyone listening to us here on Face got caught being long S&P. So Blake came in with his megaphone formation and the count AB equaling CD twice. Hi, Brock, on Monday. And he asked me the question, hello, Arena, would I short it up there? And it was this day right here. Right here. This is Monday, the 31st. And my response was, I'd rather buy VIX calls because that way, if I'm early a few days, I won't get run over. So if I shorted S&Ps that day, even at the high of the day, 35.15, we went to 35.85, and I would have been run over by about 70 handles. Don't know if I would have been able to stay and stick. So I said, I'd go with VIX calls from Monday. So here's Monday in the VIX. And then, was confirmed by Steve Volge yesterday. He said, I think the market could start to roll over today, which it did. So where was the VIX? On the same day it was here. It had a nice little range and closed good. And people are going, oh, the market's still going up. So anyway, your worst fill would have been 24.90 if you bought the high of the day in the VIX, right? So I talked about a $30 strike or so if you were aggressive and trading up to 35. If anyone took it, you should have doubles, okay, at least doubles on a move like this in options. So what I would do is take half off and you have a free trade. So anytime you have an option trade and the options double and you take off half, don't take hope off, but take half off, you have no risk anymore. Okay. So to make a call, Hanya and Euro USD before the NFP, I don't know, it's putting in a pretty negative week. Anyway, I just wanted to go over that. And then I asked Steve yesterday, where do you think VIX could go to for an upside target? And he was pointing in the mid 40s. That was before the sell-off and the spike in volatility. So nice work by the team on S&Ps. Should I throw in the full moon was out there too? Anyway, hi, Monica. Talking about the dollar, it is interesting. So we really didn't get any type of, flight to safety in the dollar yesterday. In fact, the dollar kind of closed sloppy. I still think there's a chance of a short squeeze here. I'll buy weakness if they take the dollar down. I would buy weakness. Euro on Tuesday, we had that reversal. We're down 8 pips here, so I just drew some fibs. And, we may not rally. This could just be a little, we didn't even rally 38% off the break from Tuesday's highs to here. But I have some fibs drawn in case we get a number that the dollar doesn't like. I'd be a seller, up here around 50% to 61.8 up here. And remember I mentioned the off number in euro that it had to close under, I believe it was 117.97. So these off numbers aren't bad because it traded 7 pips underneath it and came back. So paying attention to weekly off numbers, even during the week, can give you an idea. It was actually a great place to cover some shorts at the off number. And then if you were bullish euro and you say it wasn't going to stick there, you could have tried something counter trend. Oil really didn't fall apart, but oil broke the day before the S&P. So you had the dollar. First, you had the dollar turning up from Tuesday. Then you had the oil cracking, and then you had stock indexes. Now, oil, I'm thinking up here between 42, 42.50 could be a good short with stops over the highs. So I'm, going to be patient. Right now, I'd be playing Tom Petty's. The waiting is the hardest part because that's what I'm doing right now, and I'm not going to play roulette and guess what kind of reaction we'll get in NFP. Yeah, dollar strength would take everything down. Okay, everything except the dollar. So going to turn it over to Blake because I know he wants to trade this NFP and take some time for him to do the bias chart, which helps me, and I know if it helps you. And if what we're doing here in Face helps you, the way to say thank you is to become a subscriber and invest 9-10 pips a month on the best research and best team on the net. Okay. Any new members this week, please raise your hand. Anyone wanting to become a member? Okay, Arena. What's holding you back? You're here a lot. I know you trade. Anaya? Well, okay, but you're here for Face. Why? If you only trade stocks. Anyway, everyone has an excuse. I say if there's a will, there's a way. And if you're here in Face, it's because you're getting value out of our work. Okay. All right. Well, then I'd say our Euro and S&P comments are pretty good. William will be on at the top of the hour. Are you a student of Williams, Jay? Okay, Arena. You could be an asset in our chat room. Oh, yeah, things are still chaotic down there. Okay, so this will be at your fingertips. I think Friday is a great okay day to join because you have the whole weekend, and this is a long weekend. I'm not sure if we're going to be working on Monday. It's Labor Day, so I don't know if we're going to be laboring on Labor Day, but it gives you a whole weekend to learn how to navigate the site and get used to the format and setting up your phone with the app or your tablet with the app so you're not locked to your hi Blake, so you're not locked to your station, your workstation. How you doing, bro?
Good. My microphone was on the wrong setting. Oh wait, hold on. Can you?
Okay. I'll keep going.
Can you hear me?
Yeah, but it's like you're in a tunnel.
Yeah.
Hold on.
Can you hear me better?
Yes.
Yeah, but low.
Yeah. Speak a little bit more to see if it's going to auto adjust the volume.
Test.
A little better.
Yeah, a little better.
Testing. Let me just make sure. That should be good. I didn't have this mic is different because it actually has a power source that you have to physically turn on because it's not like your normal microphone. It's a professional mic, but it has its own power source, which is different. Something I forget all the time. So can you hear me okay though?
Yes.
Yeah, a little more volume would help, Blake, but we could hear you.
Let me see here.
Just maybe a little more. Turn it up, bro. Sing a song and maybe we'll
Maybe
go
a
on.
little
You're a
bit.
singer. Maybe.
All right. Well,
Like when I sing,
hopefully,
everyone would leave. Huh?
no, you have a great voice. But anyway,
Yeah.
hopefully that. Okay. Well, hey, you know what I've got to do? Sorry, guys. I'm going to take over, and I'm going to get started with this bias chart because
Go ahead.
yeah, we got an on-farm payroll today. Obviously, we want to get through the analysis and make sure that that you guys all know where all these key levels are. So, you know, let's start off with first and foremost. Let's start off with the euro. You know, one of the things about the euro that's developing here, and you know, intraday, this could be a flag, so or a pennant, and you know, I'm looking at the euro as, you know, if we're gonna hold, let's delete this really quick. The channel support's obviously key. We all know that. We've been following that like crazy. Um, let's see here, that on there, and you can see the 38% retracement is really, you know, holding, and so that right now that's 118.70. So I'm gonna write that down as resistance. We're bullish for now, but as you guys know, if we drop below 117.90, that's channel support. So I'm going to put a couple asterisks there on how important that support level is, because if we break through that, then, you know, my opinion is we're probably going to end up going back towards 117, and then quite frankly maybe even lower than that. Every bank that I've read is really focused on this 117 level. So even if we break through 118, you know, how far we go from there is you know, going to be relatively important, because if we do break through 117, then, you know, most people feel that we can go all the way back down to 115. I don't, you know, obviously that's not stuff that we're dealing with today. Today I think what's more in play is, you know, the 118 level. And you guys are going to ask me, you know, is a strong number going to give us a, you know, you know, stronger dollar, or is it a weaker number that's going to give us a stronger dollar? You know, and that in itself is a very tough conversation, because I could argue either. So it's how the market's going to take it. Is you just got to kind of react to the reaction, in my opinion, because we could have a strong number and people might say, you know what, we're not going to get a we're not going to get a you know, a Congress bill passed, and we might get some risk off, and then the dollar strengthens because of risk off, and, you know, a strong number. We could actually get a weak number, and the market could just interpret that as, oh my God, the economy is actually slowing, stocks have peaked, and then the dollar may weaken initially and then turn around and strengthen as stocks go down. We could, you know, there's so many different scenarios, and you can argue pretty much every situation. That's why I'm not going to pin myself down to, you know, say, well, this is, you know, the way to look at it, because I don't think that that's really appropriate today. Today is one of those, you got to see how the market reacts to the data, and watch your levels. That's going to be really key. So speaking of key, here's the cable. The cable's threatening, you know, move back below 132. I know we're at 132.50 right now, which is holding, but man, a move below 132, or actually, you know, it's probably more like this right here. Well, you can see this resistance right here is at 132, right? This is the breakout point. But if you take it just a little bit lower to like 131.75, there's a trend line here for the ascending wedge. It's all sorts of support. But man, if we break through 131.75, I know some of you are thinking 132 as well, but those, 32. Those are all very important. We're bullish for now, but man, you know, and I've felt this way all week, that we are at risk of counter trend moves here. So, resistance. I mean, look at how heavy the cable is. I mean, we're trading at lows right now. So, I guess we just need to mark up 133.20, because if we can get above that, then we're going to get a recovery. Aussie. The Aussie is a little scary here because we have this false breakout brewing. We held rallies to the 73-cent level. 73.10 was this, you know, channel resistance. So I'm going to write down 73.10. And right now I'm going to keep this in range. And the reason why is because we have this false breakout. And now the 618 comes in at 72.50. So below 72.50, it should open up back to 71.75. So 71.75, 72.50. Kiwi. Another pair at risk. We got a little bit of a bear flag, possible false breakout brewing. Resistance now is at here, right here, 67.40. Okay. And you know, it's like I want to put it back in range because of this failure, but it's holding up pretty well, much better than the Aussie currently. 38% retracement comes in at 66.72. All right, I'm gonna keep it in for bullish now, but whoops, but it's at risk of flipping. Dollar Canadian, the dollar Canadian is trading pretty heavy. You know, we have this inverted head and shoulder pattern that's developing, but we really need to break above. You know, obviously at this point in time, we got to break above 31.70, and then 132 is really key. So I'm going to write down those levels: 131.70 and 132. Remember, we have both US and Canadian data today. We're bearish while we're bearish while we're in this channel. Okay, but you can see the Canadian's actually holding where it needs to hold. It's just trading heavy. It was trading really bullish yesterday, you know, and then today it's like, you know, we've been leaking all day. So, you know, I'm sure people are probably a little nervous ahead of the data because you have both US and Canadian data. So right here, which will be 130.80. That just triggered because I moved it, but 130.80 is going to be support there. And then, you know, obviously if we break through that, then, you know, we're heading lower. The dollar Mexican peso has been extremely heavy, and you know, we're at the 200-day moving average. So let's just keep that in mind. Okay. That's here at 21.50. Where I'm just moving my way down. So 21.50. Below that, we have this broken trend line that comes in, and you know what? Horizontal supports at 21.45. So I'm going to write down both of those. 21.45, 21.50, and we have to get back above 22 to shift us back into our range. So right now it's bearish, and this would be, yeah, I mean, it is actually, it's 120, it's 22.95, 21.95. Let me read 95. Okay. I think I'm putting too many zeros here. No, that's fine. That's fine. Dollar, well, I'm moving my way down. Dollar Swiss. Okay, so the dollar Swiss, really I have no desire to be trading this right now. Support being 90 cents, resistance the 618 of this move comes in, and it's capping rallies right now. That is at 91.50. We're still bearish while we're below. You know, I know you hear me say this every day, but we got to get above 92 and then 92.50 for it to switch. US dollar Norwegian krona is holding up pretty well. Now, I think it's, you know, helping. It's helped by the weaker euro, and then also you have crude oil that's, you know, struggling. So the US dollar Norwegian krona resistance is going to be at this 907 level. Now this is a big previous channel. You can see it through there, so you can see why it's capping. But you got to keep an eye on this one because it's actually acting pretty well.
Looks like it might be a weekly reversal, Blake.
It could be. You know, I think we're setting up for a lot of, you know, potential reversals on a weekly basis, but you know, it doesn't mean that it's happened yet, right? But
that's for sure.
And yeah, we could have, you know, we could have a situation where it's, you know, a big inverted head and shoulder pattern, you know. So I think support here at 881, or we could just
like
write
that.
880, you know, could hold too. All right, let's go to dollar index. So dollar index, you can see just this channel's holding. You know, we'd have to break above 93 right now in order for this channel to break to the upside. So while we're below it, it's still bearish. Support, I would probably be looking at this support here. Again, these could be like big inverted head and shoulder patterns developing. So we could drop all the way back down to 92. Dollar yen. I'm going to say this again. Dollar yen, 107 to 105.20. No desire to be trading this right now. Or 105.10 to 107. It's in a range. Now, let's talk about some stuff that's really important. Gold. Where is my gold? There it is.
Guessing
So gold
is in your vault.
So there's gold, and as you guys know, this is super important support. We hit it yesterday. We're just skating above it, and so that's what 1920 is really key. And you know, it's below 1920 where I, you know, say we're going to be out of this bullish trend and we're going to be moving back into a range for a while, you know, which probably take us back to 1800, and we'll be bouncing around. Resistance is at 1950. Dollar Canadian just slipped to support here. Wow, dollar Canadian's trading heavy. You know, whenever the dollar Canadian moves ahead of a Canadian jobs report, you know it's going to be a strong number. In this case, you know, I mean, that's just look at the Canadian. I mean, right? Like you know, there's going to be a strong Canadian jobs report. It's already coming through, and they're buying. So, you know, that's thing about the Canadian. It tends to move ahead of the data, and I think the data slips out quite a bit. So, let's go over to the S&P. Okay.
Great AB equals CD count for this week. That was the chart of the week, Blake.
Well, yeah. Well, let's see if the dollar Canadian or dollar Canadian. I was just talking about it. Let's see if the S&P can hold this 38% retracement, because as you can see, this is a big resistance, right?
Yeah.
That was previous support. It acted as resistance. That comes in at 34.85, basically. 34.85.
You got to throw over and then back inside your megaphone. It never looked back.
Yeah. Well, we got to stay bullish until
34.
3,400. Yeah. You know, we drop below 3,400, then things are going to change. So we got 34.26 and then 34. So 3,400 key support, 34.25. Okay. All right, guys. Hey, I've got to roll. This is your bias chart. I've got to take off and join my office for non-farm payroll. I want to say good luck to everybody. Be safe today. Be careful. Look for some confirmation. And Steve, Stelios, Dave, good morning. And I'm going to pass it over to you guys.
Hey, Blake, are we broadcasting Monday?
No, it's Labor Day. It's a
Okay.
4-day weekend, guys. Enjoy the long weekend, everybody, and we'll be broadcasting again on Tuesday.
God, I could watch so much more television this weekend.
Yeah, there you go. All right. Hey,
All right.
that's exciting. All right. See you guys.
All right. Good luck, Blake.
Bye-bye, mate.
Thank you, Blake.
Bye-bye.
Stelios says,
how you doing?
hey, man, not bad.
Are we all ready for the big number?
Yeah.
Yep.
It's going to be big for sure.
Yeah, which way?
Yeah.
Hey,
No,
Steve, that was great intuition. You said yesterday when you were showing the S&P, you said, and it could start from today, quote unquote, Steve Volge, the decline.
Yeah, the vast majority of the instruments were showing that, things were really, really heavy. Now, yesterday's reversal was, great, undoubtedly, especially, the rout in the Nasdaq. Definitely a lot of the day traders that are popping up like mushrooms, never thought they're going to have a day like this because they're not experienced enough to know how these type of markets tend to throw up at some point, even if it's short term. They end up to do this type of moves, and we said it again and again that keep in mind these type of markets can produce like a 7-8%, 10% move lower within 2 to 3 trading days, and I think yesterday proves exactly that point.
Right, and I remember I was asking you for upside targets in VIX, and you were saying in a few days we could be in the 40s, and I think we got up to 36.
We got up to 36 yesterday in the VIX, and look at this massive candle in the VXN as well.
Yeah.
Which,
I don't think that's a one-day wonder.
Yeah, which took the VXN above 44. So yeah, I mean,
I dated a vixen once. I knew Stel would like it because I know he has too. You married one a long time ago. A vixen, right?
Well, let's move on. Yes. So,
all
right. So we're going NFPs in about a minute and a half. I have a couple of things to say. Maybe not. I won't have time to say everything before the number, but anyway, let's start with data. We had Aussie retail sales in line. Who cares? UK construction PMI missed a little bit. Again, who cares? The interesting thing was Bank of England Saunders said that Dove said that the Bank of England is probably going to need to do more easing and wouldn't be opposed to negative rates.
Of course.
And I'm scratching my head trying to find central bankers who would be opposed to negative rates. I think probably Germans would be, but that's about it.
Germans more or less, and yes, Germans and a couple more. The US ones claim that they're against negative rates, but I bet everything I have that it's a matter of time.
Yeah, I agree, and it's almost like their best dream to have negative rates and QE infinity. So that's what's pushing the pound lower today, because otherwise there is no other news. We had Barnier a couple of days ago who's been saying that, look, there's not much progress made on the Brexit negotiations, so that's also weighing a little bit, but the pound remains in limbo. And I think we're either going to shoot up a lot higher if things look like they're not going to be happening, or we're going to dump. So sideways until then. Okay, 10 seconds to go. Let's have a look at the numbers.
Let's see what we get.
We get average hourly earnings as well, but who cares about that, right? It used to be an important number.
A lot of numbers used to be important.
We're expecting 1.4K-ish. 1.371. That's in line. Revision.
I can't say U.S. manufacturing payrolls a lot lower. Canadian employment change worse than expected. Canadian employment higher. What I find quite peculiar here is the big drop in unemployment rate in the U.S. Considering that the NFPs came practically in line.
Well, guess what? Participation rate
Participation
rose
rate
by
plummeted, right?
0.3. No,
Yeah.
participation rate rose by 0.3. So that means, actually, hold on.
No, that
the
should
other
have
way.
the
That's the other way.
That's,
Well, that makes no
that
sense.
should have the opposite. Yeah. So
yeah, that makes no
I
sense.
really don't understand this number. I mean, the U.S. non-farm payroll number in combination with a huge drop in unemployment, I don't understand. I mean, mathematically, I can't even figure out how these two can go hand in hand.
Yeah.
The only way it could happen is if participation rate dropped substantially, but you said that the opposite happened, so I have no idea.
Well, maybe we're going to get a big revision. I don't know.
And speaking of revisions, last month's revision was also minuscule. I mean, you know, it was within the margin of statistical error. I mean, 29 in 1,734 is nothing.
Yeah. No, I agree. So market
the market
would have liked something.
One way or the other. The market is reacting lower, having to do with indices. So the Nasdaq is pushing at the lows of the day. The S&P, I'm assuming. No, actually, the S&P is not suffering as much.
It's flat. It's flat, really.
Yeah, from the side of the dollar's reaction, I would say it's non-existent, actually. I mean, dollar pairs seem to be, the dollar seems to be marginally strengthening, but nothing to really mention so far.
Hey, Stel, during the sell-off in S&Ps, I heard on CNBC that one of the Fed guys is talking about that they have something planned this month, additional QE or something. Are you aware of that? That someone did come out and talk about additional steps in September for the Fed?
In September specifically, no. I mean, it's
yeah,
something
they
they've been
actually
hinting.
said. Yeah, they actually said something. They're going to do something in September, and it's because of inaction of Congress that they're going to do more.
Okay, well, I missed that, but it kind of makes sense. You know, if Congress don't agree, then the Fed has to do something, theoretically speaking.
Yeah, I forgot who the Fed speaker was, but you know, coincidentally, it happened during a big sell-off.
Oh, okay.
Of course,
of course.
Coincidentally, of course.
Yeah.
So the main event yesterday after the webinar finished was stocks getting hit. And, you know, it was a very negative day. And I remember every time this happens, I remember Steve saying up with the escalator, down with the elevator. The question is this just by the dip? And, you know, we're back to all-time highs within a week, or does this continue? Obviously, nobody knows, but I think the VIX going higher and staying at these levels, even before yesterday's sell-off, the VIX was at quite elevated levels, given that we were at all-time highs. So I think that's a giveaway. And I think probabilities say that this leg should continue lower, but obviously you never know. You know, the Fed
but in this context, and knowing that the Fed is doing practically everything with the little exception of not buying stocks. Of course, they're not buying stocks directly, but in essence, all the inflation they're creating is created with that purpose exactly, to in essence enable many of the market participants to do that for them. So, but as you were saying, Stelio, I mean, think about it. We were warning that things like the VIX going in positive correlation with the indices, so on and so forth, is a very, very bad sign for like something like a week now, a little bit more. And think about it. Yesterday, in a single day, the Nasdaq daily candle, in essence, engulfed the last 6 days. So the last 6 days of the up move were erased within literally, like, what was it? 6 hours.
Yeah,
that was it. Gone.
I mean, if you look at the bigger picture, this is still just a tiny blip in the rally.
There's
but
no question about it.
You are right, and our friend Forescal is saying, is high volume the tell? That's a good point. So you have to not only see price action, but related to price action, how it gets there. All that related information. So I personally think
VIX was a tell.
Yeah, VIX. Yeah,
not
absolutely.
only that, guys. I mean, there were three very strong indicators. One was some momentum divergences. Two was the breadth of the market, which was abysmal. I mean, less and less stocks were actually pushing higher while the indices kept pushing higher. But, they were backed up by less and less stocks that were doing the heavy lifting, many of them at ridiculous valuations, for example, like Tesla. And in my opinion, there is a good chance that not the reason, of course, but the catalyst for the wooden leg the market was standing on temporarily to break was Tesla going out in the market and, in essence, drawing $5 billion. Because let's be honest, I mean, I don't know what your reasons are that you might want to beat Tesla bull at these valuations, but one of them cannot possibly be that Tesla is making money. And Tesla is taking advantage of the valuation to draw actually $5 billion because they can't make $5 billion. It's ridiculous, but Tesla makes more money by selling overvalued stock than it makes by selling cars. So, yeah, which is ridiculous, but it is what it is, right? If Tesla actually made money, they wouldn't be needing to draw money from the markets like 3-4 times per year. And of course, they try to do that, when the market is extremely frothy because, they can get more bang for the buck. So I think that might have been the short-term catalyst because, the real reasons, of course, everybody can tell. So the three reasons were momentum divergences that were pointing that something like that was about to happen. Second was the breadth of the market, which was abysmal. And the third one was as we had said, the VIX turning in a positive correlation with indices. And, almost every time it has happened in the past, it's a signal that, we're coming to an end. Of course, when you're in a bull trend, the end means that it's a short-term type of end, especially in an environment that everything is supported as heavily as we see it being supported. So if we want to go to the technical side of the thing and speak about potential levels under which the market would actually really break. I mean, we did get the first break here from the steep ascending channel, and we even broke through. And I actually remember saying yesterday in the webinar that I think we can breach both these levels within the day. We did a lot more than that. Yeah. Now the question is, can we also break through this horizontal support area and this ascending channel's trendline support? Because that is what can get the market really going in the Nasdaq, and equivalent in the S&P is this level that we're currently testing. We had this ascending channel. We had a very, very short-term minor overthrow, and yesterday we broke through the channel intraday, but managed to recover somewhat to close above it. We broke below it earlier today, but we've pulled back once again. So let's see, can we actually close the day below this? And, more significantly, can we close the day below 3,400? If that's the case, I think there is more downside coming in all stock indices. Under normal circumstances, seeing such a market environment and the type of reversal candlesticks we got yesterday, if we had this conversation a few years ago, I would tell you that statistically speaking, the possibility of seeing continuation lower for at least a few days would be extremely high.
80%, right?
Something in the vicinity. Yeah. That's exactly the number I would use, tell you. Something in the vicinity of 80% at least. Unfortunately, I cannot be that confident in this environment because, almost nothing makes sense.
Yeah, the first thing I wrote in the chat room this morning was, good morning. We had this big sell-off yesterday. usually in the past months or say year or whatever, the reaction is to bounce after a down day like this. I think that's the most likely scenario. We bounce a little bit today. If we don't, then I think that it's quite bearish. We have to, we have to close higher if we are to consider that, okay, this was a dip, but we're going to continue higher. So,
and this is also a lesson to a lot of the amateurs that believe that they became overnight magicians. I remember at some point, I actually enjoy watching these little videos that Portnoy uploads. I think somebody one day is going to make like a video library of all that and teach it in trading classes, like what kind of mentality can get you really wiped out eventually. I remember I watched one of those videos like a month ago where he was saying that he has actually made 2.5 million in the market. And yesterday he made a video that said that he lost 1 million in a day. So imagine how long this guy has been buying stocks like every day. And like a month ago, he was up like 2.5 million, and he lost like more than 1/3 of that in a day. Now, people can understand what's going to happen if this market continues like that for a week, right? I mean, people can be, strong trends make people look, like, they know what they're doing when very frequently they don't know what they're doing. I vividly remember, and still you remember it even more than I do, the 99 2000 bubble period.
oh yeah,
When literally everybody considered themselves
they were
you know
invincible. They
yeah
could do no wrong. And I remember I was, was when I first started trading like an amateur. As an amateur, I wasn't a professional at the time. And I bought some Greek bank stocks in '96. I sold in late '98. I hit my targets. Everything was fine. My friends were saying, "Oh, you're an idiot. There's more to go," and all that. And then obviously the crash came, and they all again except one lost money in the end. And I heard cases, and I'm not joking, people like selling their sheep to invest in the stock market. It was just crazy. So we have this market, and everybody conditioned to know that stocks only ever go up. They leverage, they add, they do all sorts of stuff, and then the down leg comes, and what do? They all reach for the exit at the same time. So,
and especially in a market, and I'm not saying this is going to happen now, but it will inevitably happen, and when it does, it's going to be spectacular to watch, but a real big drama for many of those. In a market that has got people indoctrinated in a 12-year period that buying the dip and holding and believing, not hoping, believing in the best case scenario pays off. Now imagine these people when they start buying dips that never get bought. What happens there? They all get margin called. Many of them can't accept the loss. They then liquidate other assets. They put them back in stocks, thinking that they can make back for the losses, and then more. And they lose that as well. Then they go into debt. They do the same, and then they're left with nothing. So I've seen this cycle repeat itself multiple times. You frequently know one of the best indicators of a bubble is that you see amateurs make more money than professionals. That always happens in a bubble, because amateurs don't have the knowledge to have any type of fear. They just buy everything they find. When you're in a raging bull trend, they make tons of money, and they're like, yeah, I made that much. I mean, and look at that. He thinks he's a professional. I watched him on TV, and he says he's made like 15% return. 15% return I make in a couple of months. And then they realize that guy that makes 15% return in a year will be there even after a bear market, while they'll be left with nothing.
It's a bit like cryptos, everybody was buying and making money up to 20,000, then it went down to 3. So, if you're good enough to be able to stop when you need to stop, well done. But a lot of people are not disciplined. So anyway, let's see how this goes.
Unsurprisingly, was making the move yesterday. We said that crude oil making the move lower yesterday was another indication. That's what got me thinking that perhaps yesterday was the day. Now, admittedly, So far, we found support in the 200 DMA, but I have to tell you that, this chart doesn't look good. Doesn't look good at all. Yesterday's losses were really contained after a late day rally. So far today, we see an inside day, but I think that this market can easily break from here. So I think trying to be long with this type of chart is a very, very dangerous proposition. So let me just say that. Now, there are two things, and two things only, that make me a little bit more skeptical about seeing more downside. One is that gold didn't budge. So that's one. First of all, let me be very specific here so I don't get misunderstood. I think that that gold getting sold along with equities is a retarded reaction, a completely retarded reaction. So I'm not saying that I consider it a normal behavior for gold to be selling off with stocks, but irrespective of what I think and how I fundamentally think this should work and why it's wrong, doesn't change the fact that market participants usually in such routes liquidate gold and gold positions, and usually that's why you see in big sell-offs you also see gold selling off, and that hasn't happened yet, and we're still holding this key trend line support and this like 1900 1920 area. So that's one. Second is that look at yesterday's daily candle in the dollar. Now, there are two interpretations here. Let me zoom in very much so you can see it. So we had one of the strongest sell-offs that we've seen in quite some time. The only reason I'm not saying in a very long time is because we had, the severe, down days during COVID. But look at the dollar. I mean, the dollar index left behind actually a candlestick that doesn't even look bullish at all. I mean, we created a pin bar after testing this descending channel trendline resistance. I'll have to tell you that it looks more bearish than bullish. So, this can mean two things. First, the dollar isn't convinced yet that something is really happening, and many investors are not convinced yet that they should be, going into cash. Because let's be honest, either you believe that the dollar should be a safe haven currency or not. That doesn't change the fact that in many cases, when you want to liquidate your positions and when you want to go into cash, inevitably you're going to find yourself even temporarily in dollars, right? That's one of the reasons why usually, especially severe risk-off reaction gets a dollar bid. But the dollar didn't really produce anything really bullish. I mean, the day before, yes, we did have a strong dollar reaction, but yesterday, not at all. And we still haven't even broken through the first area of resistance, because even if we break through that, 94 is going to be a huge level. But we haven't even broken through the first area of resistance. So, seeing the dollar, seeing gold, I want to see what we're going to do today. So, that's something I really wanted to, to stress out and mention here. So let me go through some of your questions. By the way, needless to say, stocks have gone bid. At least the S&P is positive on the day. Nasdaq is still negative on the day, but off its lows. And the dollar seemed to be more or less completely unfazed. I mean, it's a little bit stronger than where it opened the day, but following the NFPs, I have to say that the reaction is more or less considered non-existent. So the NFP does not seem to be producing any type of reaction so far. Let's see when some time passes, first of all, how market participants will digest the data, and more importantly, how they will consider reacting to yesterday's sell-off. I'm very interested to see that. VIX is negative so far on the day. Anyhow, let me go through some of your questions and see. There will be a long weekend in the USA, so likely negative. Yes, that is a good point, Irene, actually, because people, there is one thing to consider, and thank you for reminding me. Monday, is a day off for the markets, which means that market participants, if they want to stay long, they have to take into account that they will have a risk on the table for another extra day than a regular weekend. So yes, in many cases, this in essence increases the uncertainty factor, and especially following a sell-off day like yesterday, having 3 days of uncertainty and whatever news or headlines that can bring, I'm pretty sure that's gonna, in essence, increase the jitters. So yeah, might actually prove to be a risk of, as an effect. The rookie hitter fools the veteran pitcher in the first inning, but not the seventh, says Bill. And that's actually a very, very, very good quote, as Stelio said. Questions about Aussie, Yen, and Euros. Yeah, actually, something. We can start from them. Blake covered the majors, and we haven't seen those pairs in quite some time. So, Eurosi. First of all, Eurosi found support once again in this formation. Now, admittedly, given the fact that we had this big move lower, staying in a consolidation is not bullish, right? And the reason it's not bullish is because we had this huge move from like 198 all the way down to 160 in a very short period of time, considering especially that we're talking about FX. So an FX move almost 20% lower in like less than 60 trading days, it's a huge move, right? And following that move, we haven't even managed to put in a decent rebound. So basically, Euro Aussie finding support once again at support level, but overall, not looking that bullish. Considering the fact that we know that Euro Aussie is strongly inversely correlated with risk assets, that's something to consider, right? And as long as Euro Aussie stays below 166, risk reward doesn't really favor being long. Now, breaking through 166 is going to be a major bullish development. There's no question about it. Until that happens, the closer we get to 166, the better the risk reward for people that want to try to be short. Now, Euro Kiwi, given the latest, decoupling between the Aussie and the Kiwi, has actually produced quite a different result, a different picture here. But what remains a fact is that we've broken through this ascending channel, and that is a bearish development. So perhaps, I don't know, we can backtest this broken channel trend line support as resistance, but as long as we stay below it, despite yesterday's bullish reversal candlestick, from a technical perspective, there is nothing really bullish to talk about with the exception of a single candlestick. A single candlestick very frequently is the beginning of something different, but definitely not enough to bet on it, right? So it's just the first building block of what can potentially prove to be a bigger structure. But just by putting down a single brick, you don't have a building, right? You just have a single brick, and that's something to take in mind. Patson says, very educational, Steve. Thank you. You sound like my business economic professor, so mind-opening. Thank you. Although whenever I hear economic professor, because I had plenty of them, I'm getting really scared, because unfortunately the vast majority of economic professors in universities are clueless because they've only been taught theoretical economics, and many of them don't really even know how the economy functions. They just read the vast majority of the books that are Keynesian in nature, and they think they know how economics work. But unfortunately, what they do is they perpetuate false beliefs that of a system that has really led the global financial system in the situation we are today, in economies being over indebted and us believing that we can solve problems that are more or less debt related by accumulating more debt, which is kind of scary. I really hope you had a different experience with your economic professor. Because the first thing I had to do when I finished university is try to unlearn many of the economics they taught me.
Steve, my econ professor gave us a test, and the question was, what is worse, ignorance or apathy?
I know your answer. I don't know and I don't care.
I got an A.
I
All
would
right.
give you an A plus.
All right. All right.
Yeah, that was an amazing answer, to be honest.
All right.
Speaking of which, we are now seeing some dollar strength coming in the market, and I find it tough to believe that if this persists, that we're not going to see indices turning lower once again. So be careful, because if this move now in the dollar sees some follow through, expect this little rebound we've seen from the lows of the day in indices not to last. So one of the two has to give. Either the dollar will have to get rejected from this trend line resistance it's currently testing, turn lower, in which case indices can find some support, or otherwise expect indices to roll over and produce continuation to what we saw yesterday. So the next couple of hours are going to be quite important.
They're going to squeeze dollar bears so hard that their eyeballs are going to be popping out.
Eventually, it's going to happen, but I don't know if it's going to be long lived. If I thought of
We're right
becoming
there.
if I thought of becoming a teacher, yeah, I actually have thought of becoming like part-time teacher in the university. I went, but I'm afraid I would have to be more politically correct than I would want to be, and it's not easy to completely disrespect the curriculum. You know what I mean? So I'd rather be forex gal. I'd rather be okay with myself and consistent with my beliefs than just have a title. You know what I mean? I'd really love to teach, but I'd rather do it in an environment that's going to be pro bono, so nobody can actually accuse me that they're paying me to teach their kids what is unfortunately not considered so
Well, you're
mainstream.
doing that right now.
Yeah, in an extent.
Yeah.
And that's why,
pretty
it's one
big
of the reasons I
classroom
enjoy
every
it.
day.
Yeah, that's true.
Okay, Prof. So we
Uh,
have about 3 minutes left.
I agree with you, Rick. Sorry, at the beginning, when I logged in my data flash account, the data flash bar appears, but not anymore.
Uh-oh.
I'm not sure what you mean, but I can help you out here. If you want to reopen data flash, you just have to go to calendar and click on the button that says open data flash. And that will force it to open, even if for some reason you can't find it or whatever. So there's a manual way to opening it as well. Let's see what USD CAD is doing. I just got an alert. We usually put some price levels. So needless to say, quite a monstrous candle from USD CAD yesterday. Keep in mind, nothing changes until we break through this channel. So nice reaction higher, admittedly, expected given what happened to the indices. We've talked about this correlation before, but technically speaking, unless we break through this channel, there is no technical event to talk about. Okay, so yeah, we can see follow through, but betting on it yet, I think it's premature. A question about USD INR. Yeah, actually, something, I should have mentioned that earlier because of this. USD INR a few days ago, and I've been monitoring it, but I keep forgetting to mention it on the webinar, has actually broken through this triangle. So that is quite a bearish development. I was expecting that a breakout should see some follow through. In this case, we broke down to the downside. So as long as we stay, and we've now also broken through the 200 daily moving average. So as long as we stay below like 74, yeah, I think it makes sense to keep looking lower. Okay. Next area of support at 72, by the way. 72, if you notice, quite a significant support resistance area, and price has memory, so keep that in mind. Question about platinum, gold. Let's see what gold is doing. Probably breaking down. Let's see. Yeah, gold attempting to break down. So be careful with gold. If gold shows some follow through from here, and especially through 1900, that's going to be a very bearish event. And platinum, yeah, I heard you. Platinum has broken through this channel, bearish development, but 875 key support resistance area. So keep your eyes there. Okay, thank you, everybody. Oh, one more thing. Just a teaser. We're going to have ready the site for the next Traders Summit. The lineup is even better than the previous time. This time, Trader Summit will also include a highlight. We're going to have a panel. I can tell you that on the panel, we're going to have Peter Schiff, Daniel Lacal, Anthony Pompliano, and Mark Yusko. But we're also going to have 14 people either on interviews, including names like Daniele Di Martino Booth, Lynn Olden, Peter Bukvar, Jack Swager. He's going to talk about his new book. I'm assuming everybody knows Jack Swager and his books. Astraf Lady, Michael Guyed. So it's like cream of the crop. So you're going to have the ability to register. The event is going to be a 3-day event, Friday the 25th, Saturday the 26th, Sunday the 27th. And I think you should all be there. Of course, it's free. So, keep an eye on. Yeah, of course, Dale is going to be there. There's no question about it.
Okay,
we can't have an event without you, can we?
All right, man. Good. All right. Because I had nothing to do but watch TV on the weekend anyway. So be a nice break.
So sorry, I can't give you a link yet. We're putting the final little building blocks to the site, because we were trying to make sure that we get everybody, so on and so forth. So Monday the site is going to be available. I'm just giving you a teaser. I told you some of the names. As I said, many of them are going to do presentations. Many of them are going to be interviewed, and we're going to have a panel discussion, 1 hour and 15 minutes. It's very likely that Abigail Doolittle, the Bloomberg presenter, is going to be the moderator for that panel. So, stay tuned, and Monday you will be able to register for that. Okay.
All right. Wow. What an event.
Indeed. It's going to be great.
All right. So we have an event right here. William Feibel. I've never interviewed William before. William, I'm assuming that you registered as William. So I'm going to make you a panelist and hope that's you.
Gold is attempting to break. I'm going to continue a little bit until you tell me that you're okay with your guest, huh?
Okay, thank you, Steve.
So gold is attempting to break through this trend line. Of course, don't forget that today's close is going to be both a daily and a weekly close.
Hi, William. Is that you?
Quite important. So keep a good eye on what happens and how we close today. I think it's going to be significant. Now, having to do with natural gas, somebody asked before, let's see what natural gas is doing. And natural gas actually has stabilized, although we have broken through this channel, so we might see more downside. But I think that buying the dip eventually, as long as we stay above 205, is probably the way to go.
William, if you could, I'm asking you to unmute, and also, if that's not you, William, can you put something in chat so I could find you?
Yeah, So you're not sure the William you promoted is actually our William, right?
Yeah, I'm not sure. They didn't include their last name, so I'm just.
Okay, I guess we're gonna
William,
find
are
out
you
soon.
here? Asking you to unmute.
Somebody's asking for the Dow. Let's have a look at the Dow. Here it is. So Dow, quite a significant reversal yesterday as well. Keep in mind, it's now backtesting this 28,100 support area. So let's see if we can actually bridge through that as well. If we do, then I would expect, now that this has already happened, at least something like this, if not lower. Okay. Let me
Okay,
see.
asking for William going once, twice. If you could please just put something in the webinar chat box.
Aussie yen. Whoop. Aussie yen, we had a question about it. Let's have a look at it. So here is Aussie yen. Aussie yen broke through this flat top triangle, back tested it earlier today. Now, needless to say, from a risk reward perspective, buying against previous resistance acting as support makes sense. But if we break through 76 again, which the 200 DMA is almost there, we have this ascending trend line support, etc. Don't be on the long side. If we bridge through like 75, 70, 76. Now, above that, from a risk reward perspective, I totally understand why somebody wants to try their luck. But, don't be long if we bridge through that, because I think you can really see this market, tanking and, moving lower fast. So, you have your pivot area in essence, 75, 70 to 76 is the pivot area. Above it, okay, fine, you can be bullish. Below it, danger zone. DAX, yeah, absolutely. Let's have a look at the DAX. There it is. So, DAX got rejected once again from this ascending wedges trend line resistance, also horizontal support resistance area. But as you see, technically, it's not broken, right? I mean, it's clearly not broken technically. I mean, nothing has changed. Yes, an outside black candlestick is a nice reversal candlestick, but where do we find ourselves now? Exactly in the middle of this wedge. So, it is what it is. I mean, from a technical perspective, I need to see a move below like 12,600. Below 12,600, yes, there is a valid argument to be made that the uptrend has broken and we should see a much deeper corrective move. Let me see.
Hey, Steve, I'm unable to, he's not responding to me.
It's okay. We gave
Twitter.
We gave more time to William. We answered more questions. Okay. So I'm assuming, Dale, that we can wish everybody a nice extended weekend. And as I said, keep your eyes on. You don't want to miss this event.
Well, great job again, Steve, with being on top of VIX before the fact instead of after the fact. And yesterday, I've heard you say that you think Blake has great trader intuition that sees turns before they happen. Well, yesterday I could quote you, and you said it could be today, and I hadn't heard you say that in a long time. So you have pretty good intuition yourself. My Greek trading warrior brother.
That was more of data gathering. With Blake, it's different because I've seen him think that something is going to reverse when I look around and I really don't see what he's looking at. You know what I mean?
Yeah.
That's why I call it an intuition in his case.
Yeah. Well, no one understands why I'm saying what I'm saying. So what do you say about that?
I'm sure that's not the case.
That's the magic of Dale Pinkert. So anyway, Steve, have a good weekend.
You too, and everybody else.
Our community, have a great weekend, and do your work over the weekend so you're not, executing on the fly. You're ready to execute. A decent week in the dollar. I think we have some things that have shifted a little bit for us to, have some bear market rallies in the dollar and some corrective action in the market. So get ready. All right, because it's September. Kids go back to school. I used to say we have to wait for the Hedgies to get back from the Hamptons, but they're not leaving. They're staying there. They're not going back into the city. So looking forward to having a great September with all of you. So remember, don't just count your pips, count your blessings. And we'll see everyone on Tuesday. Thank you, everyone. Okay,
Thank you, Dave.
Steve. Shut it down, bro. You're welcome, Laura, Monica, Richard. You're very welcome, guys. Adios.